At the Paulson Institute, you spent a fair amount of time on China. You know China well. You spent a lot of time over there. Talk to us about China-U.S. relations or China-world relations right now. There's a lot of friction going on. Are we risking permanently changing both U.S. relations with China, but also China's relations with the world? Will they actually move into places in Asia and around the world?
Well, there's a lot in what you just said. So first of all, we're dealing with a different China today than we were just even a few years ago. So China is now a economic competitor to the United States. It's a security competitor to the United States. It's using its capacities and capabilities to exert influence in longstanding spheres of U.S. Influence. It is on the economic side. China is almost a $14 trillion economy, and it hasn't opened up like it should. So it's I think untenable for China to continue to say the world should keep their markets open for Chinese companies if China isn't going to open up for foreign companies. So there's a lot going on, but I really believe that this trade war obviously doesn't benefit anyone, and the tariff impasse is a serious thing.
Knowing China and its leadership the way you do, is there a better way, a more effective way for us to get that opening of the markets than the way we're doing it right now? They have a lot of pride. Saving face is very important to them.
I don't think there's an easy way, but I think by far the best way to do it is to work with our allies to exert pressure, and to exert pressure that way as opposed to tariffs. Because not only it's the public confrontation an issue, but the other thing about tariffs are people focus on the short-term impact, which is, it's a tax on the American consumers. I think we don't pay enough attention to the dangerous long-term impact. Companies and countries want to do business with the United States because we've got reliable, stable economic policies. And so the question really is, is China going to start looking for new markets for which they're going to buy soybeans, Brazil and Africa? Are they going to be concerned that they need to protect themselves if there's another tariff war and they need other suppliers? What about the foreign companies that are they going to want the U.S. to be a supplier if they think the United States is going to come in and break up the supply chain? Is a foreign investor going to want to come in and build a plant in the United States if they're afraid they're going to be in the middle of a tariff war? So there's some real potential risks here. So I applaud the objective of opening up the market. That past efforts haven't been as successful as they should be, but I worry about the long-term impact.